In the course of 5 days, 3 banks have failed in the United States, and those lenders were critical counterparties for a huge part of the crypto industry in the country. They served as a place where giants like stablecoin issuers Circle and the largest U.S. crypto exchange Coinbase once held deposits. These banks warmed to the crypto industry before any other banks really got on board, and some of them have remained the largest financial institutions to the crypto world before they shut down. Silvergate's announcement of liquidation was the most dramatic, given about 90% of its deposit base was tied to the crypto industry. But Signature also had significant exposure, and the bank's closure was far more abrupt in a surprise announcement late on Sunday night. Among its directors had been Barney Frank, a key proponent of the Dodd-Frank Act in the wake of the 2008 financial crisis that transformed the financial industry. He said crypto was a common thread behind the bank closures and a new and potentially destabilizing force to the financial system. But he also said that financial watchdogs were sending a message to get people away from crypto. He told Bloomberg that Signature was singled out to be the poster child for that message. Nick Carter of Castle Island Ventures had long been critical of the government's actions to stifle the crypto industry, referring to the efforts as the Operation Choke Point scheme to marginalize specific industries by choking off their banking access. Frank's comments added fuel to Carter's argument, and Carter's point about Signature was that its assets were not as troubled as Silicon Valley Bank, where the concerns about bank runs and liquidity mismatches were so dire that it quickly became the second largest bank failure in U.S. history. Signature, once closed, became the third largest. There are real ramifications in real time. One big example of this, Silicon Valley Bank was a known banker to Circle, which had $3.3 billion worth of cash reserves in the bank, which amounted to about a third of its cash reserves. The market was concerned that this money would be trapped, and the USD stablecoin lost its peg to the dollar, trading about 88 cents on the dollar during the weekend. But once the United States announced its rescue of SVB and Signature clients, promising that all depositors would be made whole, that stablecoin rose back to meet its peg again as holders gained security that the underlying cash was safe. Circle CEO Jeremy Allaire has moved money from SVB given the bank's failure. But as he looks forward, he's voicing more criticisms about the fractional reserve banking system in the United States, and he's looking to advocate for a different method of reserving funds that could insulate crypto from banking risks. He's not the only one. Coinbase CEO says non-fractional reserve banking is becoming attractive, and he is even given thought to how Coinbase could engage in more banking activities, neo-banking activities, in the middle of such a storm. The innovators, they're still innovating, and they're finding new ways to bank in what's a meltdown to the bankers of the biggest crypto firms.